I want you to realize that even if you don't raise money from anyone else, even if you start with 10,000 rupees that you had as savings or whatever, the proverbial 10,000 rupees that people start up with, you are putting a lot more than the 10,000 rupees in your business, which is your intellectual capital, your time, right? So that's the most important capital in your business. Please be mindful of that. And so you're a capital provider more than just money. So those are some of the premises. I'm going to talk general principles and no, nothing industry specific, right? So these are the three threads I will touch upon. I will spend a fair bit of time talking about financial planning for a startup. That's the sense I get from what Salma wanted me to do. So, I hope there's no way for me to know what you have as expectation from me. So I'm assuming you would want to hear about that. If it gets too boring, just put up your hand and say, shut up. I will stop. Managing equity, and I talked a little bit about valuation, just a wee bit. Right. Okay. So what's the role of finance? Why is it so important? Why do we need to talk about it at all? First and foremost, you want the enterprise to remain sustainable, which is not in the green environmental sense, but financially sustainable, right? I'm not against green and environmental sustainability. It's just that I think first you need to keep the belly full. Otherwise, there's no point in talking about the greenness and environment around you. So I think, as somebody said, armies don't march on an empty stomach, so you need to make money in the enterprise. That's my fundamental belief. Okay. Secondly, whoever gives you capital, including yourself, you need to be happy in terms of the return. Third, we need some metrics that we go along with, so measuring performance. You need to communicate performance, and the most convincing way to convince anyone is to talk about numbers, financial numbers, because at the end of the day, business is all about making money. That's my belief, or that's, as I said earlier. So you need to communicate performance, and lastly, of course, it is a means to incentivize various stakeholders. I mean, in a startup, unlike in a large company where people come because of the CV value, the brand value, the perquisites, etc., etc., in a startup, one of the most powerful means of attracting people to come and work for you is by allowing them to share in the spoils, right? And if you want to do that in a sensible way, you need to think of finance. Okay, so we'll see what that means, right? So those are some of the reasons why I think it's important for us to go through this session. So I'm sort of building a case for my being here more than for your being here. Okay, so we'll come to this. So this is something that my good friend and research collaborator Rama Velamuri told me once. He said this is the Harvard lessons in entrepreneurship. So, I mean, I don't know. I have not come across a Harvard book that talks about it, but he says there are 3 lessons in financial management and entrepreneurship. Unfortunately, it's a PDF. It was meant to be a fly-in with an animation effect. So there are 3 lessons. Do not run out of cash. Do not run out of cash. Do not run out of cash. Right? So if you want a 1-minute finance lesson, if you want to walk out of this room, please walk away with this learning. Never ever run out of cash in your business. But the trouble with all of these aphorisms is that they are very nice to talk about in a evening cocktail kind of context. The devil, as they say, lies in the detail. So what I am hoping to do is to drill a little bit into the detail in the next few slides, right? So this is a standard line. I'm going to skip the slide, right? So now at the minimum, so when I talk to my students, I say to them, you're going to